Hey, welcome back everyone. Very long time since I've made a video. I've been quite busy, but want to talk about AT&T stock today, which basically crashed from around 24 a share down to like 18, 19. I mean, holy crap. No, I'm just kidding. I'm sure everyone realizes the reason AT&T crashed is because it wasn't a crash. When the spinoff of Warner Media finally took place, which it has, over to Discovery, AT&T shareholders were gifted shares of that new company merger, and you still keep your AT&T shares, but they had to be adjusted accordingly because you weren't just going to be given free shares for no reason and get to keep your AT&T shares at that value it was at, which was like around 24 when this happened. So, yeah, now that that's out of the way, I'm sure everyone knows why the stock went down. It's because of the spinoff and you getting Warner Media Discovery shares, shares of the new company. But I just kind of want to reiterate for anyone who's invested in AT&T currently or is looking to be invested in them. I want you to kind of realize what you own or what you could own. So again, this is a stock that is cash flowing, free cash flow, 20 billion or more every year. And if you've looked at the market cap for AT&T, you'd realize to cash flow, that amount of free cash flow every year, 20 billion plus, is really incredible. There's not a lot of companies cash flowing like that are this discounted. I actually, in a previous video, did a DCF analysis based on, about 20 billion a year. I did it based on not assuming for even more free cash flow, which will probably happen, but we did a DCF 5-year model assuming 20 billion in free cash flow every year, and that put the stock value at around 40 fair value. I don't think it's going to stay below 20 for very long, if I'm being honest, now that all of this is out of the way and Warner Media is spun off. I mean, in general, the stock was just already beaten way down. This isn't a stock, in my humble opinion, that's worth less than 20 and not even close to 20. Based on that free cash flow generation alone each year, even if you called it just 20, it should be, even if it was above 20, even if it was just 20 billion in free cash flow generation, this should be a 30 at least. But realistically, the fair value points to closer to 40 a share. So again, this isn't financial advice, but this is more so me just putting the facts out there. Cash flow that is being generated each year versus what their market cap is. This is ridiculous. The share price is way too low. And now that the dust is settled, I don't think the share price will stay down for long. Again, let's remind ourselves you also have a company that is dedicated to paying down the large debt they have and will use most of the money from this spin-off deal of like the 43 billion they got. They're going to use majority, if not all of it, they already said, to pay down a lot of their debt, or a fair chunk of their debt, and they're determined to keep buying down debt is what they've said. From there, if they can also buy back shares, that's the biggest thing. Also, you still get a very reasonable dividend last time I saw it of about 4.6%. You really can't be sad or unhappy with how this turned out. If you're a current shareholder, you have to make your decision. Like, is it time to ditch AT&T because I'm mad about the dividend being cut? Although we've all known about this for a very long time now. But, whatever. Those are my thoughts. AT&T, do I personally think it's a buy? I've already run a DCF model based on Warner Media already being spun off, and the stock value came out at a fair value of 40 based on an entire model, 20 billion in free cash flow, not even assuming more free cash flow, and a discount rate of 12% through those 5 years, discounting it back. So I personally say it's worth it. Again, not financial advice, but the numbers suggest that this stock is a buy all day. I think the market, now that the dust is starting to settle, will soon realize that this is indeed a very good value play right now. I don't think it's going to be affected by a recession, if there is one, much. Isn't really going to be hit anymore by big market volatility. We've seen that it really wasn't getting hit by market volatility anymore after the big drop that it had over time. It was staying around the 23 to 24 range while a lot of this huge market volatility was taking place. So the numbers say it's a buy. There's really nothing else you can say about that. But okay, that's all I've got on this stock. And I will see you guys in the next one.